Alright, so it's going to do a trade breakdown for British pound yen, and obviously we've had this massive sell off after the interest rate rise decision by the BOJ, or the Bank of Japan, and we can see a recovery coming back up. So, what's some of the rules of structure? Once there's a big sell-off, there's usually a recovery of some sort. So we can clearly see support here, and we can see resistance there, support being formed. Now it's in the range. I have pretty much come onto the computer where it was about here. So I've come down onto the 30-minute chart, right? I've looked left, I've seen a previous resistance at this level, so therefore that's why I had a horizontal line there, and I had a horizontal line here for previous resistance here. So I've pretty much, come onto the computer at a time where it was over here, and I've come down onto the 1 minute chart, brought it back all the way here, seen a nice push above resistance or previous resistance. So it's come across, it's tested it 1, 2, 3 times, right, in this small consolidation phase, pushed up from this area of demand, then it's come once and twice to retest this zone. So I've taken an entry at 161.010 and pretty much just let it ride. So stops below previous demand over here and previous support over here. So support, resistance, now becomes support, and then demand. So 1, 2, 3. So filling up the bags until a move up to previous resistance. Then it looks like, it was a liquidity hunt for, potential short positions that were at previous resistance, to try and capture that liquidity so that the longs can close out without having too much of a, average down. So if the longs are here and they're taking out, stop losses or liquidity, then they can take it at full maximum profit, rather than closing a little bit, and then having to sell off partially and only getting partial fills, so they can get full fills in this liquidity zone. And then throughout the night comes back into the range and moves down as Asia keeps opening right back to where we were beginning. So it was just a move up, as the structure was recovering. So market recovery, close out, maximum fill, and then a move back down to find where new liquidity is, wherever that may be.